Let's talk about Donald Trump. That's what I'm talking about with everybody here. So he looms large in Davos conversations, even though he's not here. Will he be a net positive for your business, do you think?
I've spent time with the administration, and there seems to be a sense that we need to help corporate America. We need to provide for a better tax regime. In the U.S., we have the highest tax rates of OECD nations. But also, and equally interesting to me, there's a sense that working together, working thoughtfully, we can make it more advantageous to be a public company. The number of public companies is down by half over the last 20 years. And so it's time, and in fact, maybe even overdue, to kind of rethink regulations, make sure there's not sensible pinpoint opportunities to improve the environment for U.S.-listed companies.
I'm glad you cited the decline in public companies. I was going to bring it up. Let's diagnose the problem. Why are there so many fewer public companies today than there were when it peaked in 1995?
Well, let me start by giving you almost a devil's advocate position. So the number of public companies is down round about half. The aggregate market cap is up round about 3 times. So in other words, the public company model isn't broken, but the companies are much, much larger. And so it says something about what is the kind of the entry cost, or what is the fixed cost to be a public company.
The Jobs Act was supposed to fix that.
And the Jobs Act was very helpful. But you have to remember, we've laden on a great deal of regulation, some helpful, some not as helpful. Sarbanes-Oxley 404 required an army of internal auditors. Dodd-Frank, the entirety of it, but Title VII and some of the specific regulations that companies are still wrestling with, conflict minerals, SAM pay, proxy access. All of these things, including the increasing role of activist investors, has increased the fixed cost for public companies, and it is harder for a smaller company. For a bigger company, they can hire an army of watchers and internal auditors. For a smaller company, it's difficult.
In the shadow has grown an enormous private financing industry. So what can be done to make it attractive enough to go public that staying private for longer doesn't seem like a better idea?
Yeah, and I'm glad you mentioned that, because I neglected to mention that in my prior answer. But that, too, is a contributing factor to the number of private companies. There is a more mature financing market. But
like, you would love it if Uber listed on the New York Stock Exchange. Yeah, you would love it if Airbnb listed on the New York Stock Exchange. Yeah. Neither appears to want to anytime soon.
Yeah. Let me just kind of pause there and say, there are very few Uber and Airbnbs in the world. In other words, we can rattle them off probably on one hand. Private companies with nearly unlimited access to capital. But even those companies, they have employees who joined them a decade ago. They were 26 years old. They had no husband. They had no children. They had no mortgage on their house. Now they do. They need some liquidity. So even those big, really exciting tech companies that people thought were the exception that proved the rule, they're ginning up the IPO machine. I'm not referring to any companies in particular, Eric.
I was hoping you might be.
I see the look you're giving me. But you know, take Snap, for instance. Certainly been in the press as a prospective IPO. So even those companies we are seeing come public.
What are you doing to win the war for the Snap IPO?
You know, we win where we do best is with large IPOs. Because companies that investigate, and when I say large IPOs, they're raising a good deal of money. Let's say $500 million, $700 million, $1 billion or more. Those companies invest a great deal of time in due diligence to identify what's the best venue that gives me the greatest confidence that on the first day of my life as a public company, everything's going to go smoothly. And if you look over the last 2.5 years, you take the top 25 deals, all 25 have chosen the New York Stock Exchange, 25 out of 25. And so for those types of companies, when you say, what am I doing specifically, I'm not going to refer to a specific company, but what we do every day for those types of companies is make sure that model is going to work for them perfectly on day one.
What would you say your chances of getting that Snap IPO are today?
I'm not going to comment in particular, but again, 25 of 25 of the last IPOs. So I'm hopeful we get all of the exciting IPOs. I'm hopeful, quite frankly, we get all the IPOs that qualify in the New York Stock Exchange. But I feel good about those larger ones that care deeply about execution of my IPO on that first day.